What's going on? Welcome back to the channel. So today we're going to talk to you about SoFi. It was fun while it did last, the nice green morning, but unfortunately tariff news did cause a lot of extra volatility today. So I want to go over what happened and everything else that you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So SoFi went down 3.65%, 924 the low, 1058 the high. So massive amount of volatility. And in case you do not know, what came out today was this. So White House reconfirming that they are going to be hitting China with the extra 50% tariff, making it 104%. But in reality, I think the writing was on the wall, as I even brought up in my pre-market video. When everything was just going up, I stated, I'm like, well, technically China already stated yesterday that they're not going to bend the knee to the states' threats. So I think all of this was the writing on the wall that there was going to be additional tariffs. So I don't know, maybe today all of this was just a massive bull trap. Because like I said, I think the writing was on the wall. There was just a lot of optimism because Bank of America, JPM all stated that because of the circumstances, the feds will be somewhat forced to cut both during the May 7th and also June 18th meetings. And so far, it kind of looks like that. So for the May 7th meeting, you have a 51.8% likelihood of a 25 basis point cut. And then for the June one, you have a 6.1% likelihood of a following 25 basis point cut. So it's kind of an interesting scenario, but like I said, I think the writing was on the wall. Maybe today was just a massive trap, but there was news that did come out from SoFi. So Galileo deposit sweep product amplifies customer interest, earnings, and extends FDIC coverage. So pretty good stuff. I feel like a lot of the recent news from SoFi has been Galileo related, whether it be just partnering for credit cards, or this one is for clearly financial institutions. So I think Galileo is going to be a big part of SoFi going forward, but nonetheless, I don't really see this as a crazy reason to go out and buy SoFi nor sell. So it was kind of just stuck in limbo, unfortunately. But there is just a hell of a lot of optimism coming from retail for SoFi. And there was one thing that came out today that I wanted to share with you. This individual who has 600 followers or something, but they do say, well, I did it, sold all of my SoFi, I really did, but turned around and bought SOFX. So ticker SOFX. In case you don't know, that's the 2x long leverage. And I just wanted to kind of pop on and kind of warn individuals during times of volatility. This is not usually the best. If you're trying to diversify, just maybe stick with options. But this one, if you are long due to just the decay, this isn't a long-term investment. This is just more so for swing trading. And yeah, unfortunately, I think a lot of individuals might make the wrong decision and go 2x long on any stock out there and just get absolutely decimated. I don't know how much this individual has. Maybe it's just $50. And if that's the case, then who cares? But if you're putting thousands upon thousands of dollars in SOFX, just be cautious. So let me know your general thoughts on that in the comments below. I myself did buy, not the SoFX, just SoFi, just 35 shares, as you can kind of see, at $9.47. Bought it 1 minute before the market did close. And honestly, I bought very well knowing that it could continue to go down. Just SoFi is a very interesting stock, a very volatile stock. 2 days from now, might be back at the 1050 or potentially could be at the 8, but I think bigger picture, SoFi is going to do a lot of good things. So let me know your general thoughts on that, and if you did buy the dip or if you sold or whatever else, give yourself a shout out. Moving on, looking at shorts, they did return 408,000 shares. So kind of interesting. This is why I like to analyze this type of information, because by shorts returning, kind of shows that today's pullback wasn't really justified. Of course, tariffs are going to be not a good kind of scenario, but at the end of the day, like a lot of consumers, especially during COVID, learned and adapted. And I feel like the market just treats consumers like they're complete idiots and that they're not going to stop let's say, just overspending on money. So for instance, all these China tariffs and whatever else, yes, it's going to make products more expensive, but consumers can just easily not buy that product and just kind of switch and pivot, as what they have done many times in the past, especially, like I said, even during COVID and all that crap. People were worried, hey, people are laid off and they're not going to be able to do anything. Like, everything's fine, right? So let me know your general thoughts on that. I feel like just a lot of this whole tariff has been blown up out of proportion, but then again, maybe there's some kind of attribute that I'm missing possibly. But nonetheless, enough of that rant. 13.02% of the free floats being shorted, works out to be 140.28 million shares overall are being shorted. Cost to borrow average 0.31. Cost to borrow minimum did improve slightly, but still is negative. Moving over to the options, you had 12 million in calls, 14 million in puts. 49% of all the options being done were bullish in nature. So just to kind of give you an overview, so today was 25.9 million in total premiums, 36 yesterday, 52 the day prior. So a little bit lower on that front, but again, I think that was somewhat anticipated. It's not realistic to assume 36 to 52 million every single day. But of the call options that were done today, you see a consensus for it to be roughly around that 1050 to 11. And then the bears are anticipating for it to be sub 850. And that's something that the bears have been doing consistently. Doesn't matter, even when it did go up, they were still betting that there was more downside. Again, leads you to believe that today was just a bull trap, as I again mentioned during my kind of pre-market video. But these are all the transactions that did occur throughout the day on the secondary market. So you did see a lot of selling, which again is another sign that there was a lot of kind of iffiness in the broader market. Straight out the gate though, you had a lot of selling, very few kind of buys throughout here. So one of the biggest attributing factors must have been algorithmic trading. These are all the transactions that did occur so far on the dark pool. So last one was done a couple minutes ago, so 3.7 million. And then aside from that, that seems to be the only one above $1 million. So big money wasn't really looking at SoFi all that much today based on that, with it at $9.50, trading between the S2 and S3. So $9.96 is going to be that next strong kind of point to really get over in the short term. And then flip side, $8.41. A lot of volatility. This is why you're seeing wide gaps on the fib levels. So $8.41. Do you think that's coming next? What's your kind of 2 cents on all of that? Aside from that though, as I mentioned, there was that rating that did come out yesterday. So maybe they were also reading between the lines, a $6 sell. Morgan Stanley, Jeffrey, who has a 31% success rating. So it's not the best. Like I said, there's a lot of analysts that really seem to strategically give negative ratings on SoFi. So maybe they are waiting and for an ample time to do that. I don't know. We'll just have to wait and see. But on the actual chart, there's not really much. Even yesterday, when it did show a nice recovery, I kind of stated that there's still not much really positives to bring up. It is below the ALMA, 200, 150, all of those moving averages. So it is kind of in like a free fall right now. As far as stochastic RSI, it is considered very oversold. So a good piece of news, you could see a nice push higher, but all in all, it does look as though until we get some clarity associated to tariffs or China or the States, one of them really bends the knee, is what the market's liking to call it, then we're going to continue to see a lot of blood in the broader market. But that's just sentiment. If you do believe in SoFi bigger picture, as I do, then you can just buy the dip, do what you need to do, but just do it in stages. Don't go all in YOLO, and especially don't go all in on this, the 2x long. You'll be losing your equity very, very fast. And that's even aside from the decay, right? So if you buy this and SoFi, let's say, stays absolutely flat, you will still be losing money because of the decay. So I think a lot of just investors don't know what they are doing with leveraged products. But again, I am not a financial advisor. You do whatever the hell floats your boat. So with all that, appreciate all of you watching. One final thing, pop over to my Patreon and get buy signals on stocks, options, and crypto, many of which are absolutely on point and bangers. So definitely pop over there and take a look. With all that said, appreciate all of you watching.